If you are paying any life insurance policy, that also comes under deduction 80C. So from your total income, you can deduct your life insurance policy, what you are paying every year. So pension from the annuity plan, including interest and bonus, is taxable in the year of receipt. You can get an additional deduction of rupees 25,000 if you are also a senior citizen. Thus, you can claim the maximum deduction of rupees 1 lakh under this section. Hello everyone, I am Arun Kumar, lecturer in Department of Commerce and Management, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. Dear students, welcome to the first session on unit number 5, that is tax deduction at source and advanced tax ruling. Yes, dear students, in this particular chapter, you are going to study about the aspects of TDS, that is tax deduction at source, and also you are going to learn about the different deductions we have under section 80C to 80U with respect to individual and HUF, that is Hindu undivided family. And also you will be learning and solving the few problems based on advanced tax ruling. So in this unit, we will be discussing about mainly on 3 concepts, that is deductions under section 80C to 80U with respect to individual and HUF, that is Hindu undivided family. And the second thing is you are going to discuss about the TDS, tax deduction at source, and also we will be discussing about advance tax payment. So first we start with the deductions we have under section 80C to 80U. So before explaining the each section, that is 80C, 80CC, 80CCD and all, so first we have to understand what is this deduction. Okay, so deduction is nothing but as an individual you will be paying tax to the government. Okay, on what? On the total income earned by you, you will be paying the tax to the government. In case if you are earning 10 lakh rupees or 5 lakh rupees, you will not be knowing what is the amount of tax you are supposed to pay to the government. For example, the people who are below the age of 60 years, for them up to 5 lakh rupees they can take the exemption of tax. Up to 5 lakh rupees of their income, they can take the exemption of tax. More than 5 lakh rupees if they are earning, then they are supposed to pay tax to the government. Okay, even though they are supposed to pay the tax if they are earning more than 5 lakh rupees, still they can avoid the tax up to 6,50,000 rupees. Okay, actually if your income crosses 5 lakh rupees, you are supposed to pay tax, but by investing our money in some schemes, okay, or by donating, or by investing in your spouse name or in your children's name, you can save another 1,50,000 rupees under the deductions column. The deductions are called the deduction under section 80C to 80U, available for the individuals and HUF. So here, if you are earning more than 5 lakh rupees, you are liable to pay tax. In order to avoid the tax up to 1,50,000, that is 5 lakh plus 1,50,000, up to 6,50,000, you can invest your money in investments or in some deposits, or with some giving donations and all. You can save the money for the future. So this deduction concept mainly introduced in order to inculcate the habit of deduction in the minds of the individuals and in the minds of the HUF, so that in future they will not be depending on anyone to lead their life after the retirement or after the age of 60 or 70 years of age. So with that perception, we have this deduction. So the first deduction is section 80C. So what is this section 80C? Under this particular section, the person can invest up to rupees 1,50,000. Any individual and any HUF, they can invest up to rupees 1,50,000. Here it says it provides tax deduction of up to rupees 1,50,000 through tax savings investments. Yes, here under section 80C, you can make the investments up to rupees 1,50,000. So it is a deduction what you are going to get under section 80C. And only individuals and HUF, that is Hindu undivided family, can claim deductions under this section 80C. Yes, as I said, this section 80C is applicable only to the individuals and HUF. If you are an individual or if you are an Hindu undivided family, so that you can claim in particular investments under this particular section, and you can save the amount of rupees up to 1,50,000. So the following are some of these investments and expenses. So yes, you can claim the following investments. So which are those investments? you can invest in PPF, that is Public Provident Fund. Okay, under section 80C, you can invest in Public Provident Fund. So then you can get the deduction under section 80C from your total income. Next one, ELSS, that is Equity Linked Savings Scheme. Yes, ELSS is nothing but Equity Linked Savings Scheme. You can also invest in this particular scheme under section 80C. You will get the deduction. And you can also purchase NSC, that is National Savings Certificate. That also comes under section 80C. And ULIP, that is Unit Linked Investment Plan. ULIP is nothing but Unit Linked Investment Plan. This also comes under section 80C. And SCSS, that is Senior Citizen Savings Scheme. So on this also you can invest. And the payment towards life insurance policies, yes, if you are paying any life insurance policy, that also comes under deduction 80C. So from your total income, you can deduct your life insurance policy, what you are paying every year. Next, tuition fee paid for up to rupees or up to 2 children. So whatever the tuition fee you are paying for your children's education, you can claim that also as a deduction under section 80C. Next, tax savings fixed deposits. Yes, if you are investing any tax savings fixed deposits, that also comes under section 80C. So these are all the different schemes or the investments what you have under section 80C. And if you are investing in any of these schemes and you are paying tax to the government, you can ask for deduction under section 80C from your total income, and you can save some money instead of paying extra tax to the government. So further moving, section 80CCC. Okay, section 80C, it is with respect to some investments. So what is this 80CCC? So this subsection under section 80 of the Income Tax Act offers tax deductions on pension plans offered by various public and private insurers. Yes, under this particular section, that is under 80CCC, it offers you the deductions with respect to the pension plans offered by the government and private insurers. If you are opted for any kind of pension scheme, whether it is provided by the government or by the private insurers, then you are eligible to take the deduction under section 80CCC. So individual taxpayers can claim deduction up to rupees 1.5 lakh in a financial year for the premium amount they deposit for any annuity pension plan. Yes, if you are depositing the amount, any premium to the pension scheme, okay, if you are investing amount or if you are paying any premium for pension scheme, so whatever the premium you are paying, whether you are paying 10,000 rupees per month or 10,000 rupees per year or 1 lakh rupees per year, that premium amount will be considered as deduction under section 80CCC. So here, whatever the pension, whatever the premium amount you are paying every year towards the pension scheme given by the state government, central government or by the private insurers, so that premium what you are paying is deductible under section 80CCC up to rupees 1,50,000. So pension from the annuity plan including interest and bonus is taxable in the year of receipt. That means every year whatever the premium you are going to pay, that premium is or it can be claimed as deduction, but at the end you will be receiving the pension amount. Now after the maturity period you will be receiving the pension amount or the interest amount. So whatever the amount you will be receiving, the amount received is taxable, but whatever the amount you are paying in the form of pension premium, so that is deductible under section 80CCC up to rupees 1,50,000. So this is the deduction what we have under section 80CCC. Next, moving further, section 80CCD. Okay, so what is this section 80CCD refers to? So under section 80CCD subsection 1 allows employees to claim deductions from the amount they have paid for any pension scheme under the central government. Yes, here if any person, if any individual or if any employee, if he is claiming the deduction for the amounts they paid for any pension scheme under the central government. Yes, if they are investing or if they are investing in pension scheme with respect to the central government, then those kind of employees, okay, employees, that means the workers, if they are opted for deduction for the investment in pension scheme under the central government schemes, for them section 80CCD is applicable. Individual can claim deductions of 10% of their salary or 20% of gross total income, whichever is lower, up to a limit of rupees 1.5 lakh. Yes, as an individual you will be working, okay, and you have planned to invest under the central pension scheme. Yes, you can get the deduction if you are investing in central pension scheme up to rupees 1.5 lakh. Okay, that too, the deduction will be considered 10% of their salary. Okay, whatever the salary you are receiving, on that total salary, if you are receiving like 10,000 rupees, and on that 10%, how much? It is rupees 10,000. Okay, let us say every month you are investing 10,000. So this 10,000 they will take, or 20% of gross total income. That means the overall income for that particular financial year. Let us say you earned 5 lakh rupees. Okay, you earned 5 lakh rupees or 6 lakh rupees, let us say. So on 6 lakh, what is the 20%? So on 6 lakh, if you compute 20%, so we will get rupees 1,20,000. No, so in these two, whichever is low, 10,000 per month into 12 months, 1,20,000. Here also you will get 1,20,000. In those two, 1,20,000 you can take, anyone you can take, because both are having the same amount. So 1,20,000 or 1,50,000. In these two, again, whichever is less, 1,20,000. So up to 1,20,000 rupees you can claim as investment in pension under section 80 CCD. So section 80 CCD is with respect to the employees who are investing in central pension scheme, and they can claim up to 10% of their salary or 20% of gross total income up to rupees 1,50,000. So this is about section 80 CCD. Moving further, section 80 CCF. So here under this particular section, section 80 CCF allows tax deductions of up to rupees 20,000 for long-term infrastructure bonds. Yes, if you are investing in any kind of long-term infrastructure bonds, that is the government or the private long-term infrastructure bonds, you can ask for deduction of up to rupees 20,000. Okay, and which are notified by the government. Yes, the long-term infrastructure bond should be notified by the government. Then only that will be considered as a deduction. If it is not notified by the government and if it is a private company bond, then it is not considerable. The particular companies which are notified by the government, if you are investing in those companies infrastructure bonds, then you can claim the deduction up to rupees 20,000. Okay, next, only individuals and HUF can claim this deduction under section 80 of the Income Tax Act. Yes, under section 80 CCF, this section can be claimed only by the individuals and by the HUF, not by the any other parties like company and other authorities. You can also claim tax deductions from investments in government, that is notified equity saving schemes. It allows specific individual resident to get the deduction amounting to 50% of the investment to an upper limit of 25,000 rupees. Yes, other than investing in the government infrastructure bonds, you can also invest in government notified equity savings scheme. Yes, instead of investing only in the infrastructure bonds, you can also invest in the notified equity savings scheme, and you can invest up to the maximum limit of 25,000. So this is what section 80 CCF says about the investment with respect to government infrastructure bonds and the government notified equity savings scheme. So moving further, section 80D. Okay, section 80D under the Income Tax Act allows individuals to claim deduction on premium paid for health insurance policies. Yes, section 80D talks about the insurance policies paid toward the health insurance. If you are investing in health insurance, so that you can ask for the deduction under section 80D. If you are investing in health insurances, yes, obviously you can ask for deduction under section 80D. So here you can claim the maximum deduction of rupees 25,000 on premium paid for self and family members, that is spouse and children. Yes, you can claim the maximum. You can claim the maximum amount of 25,000 rupees if you are taking the health insurance for you and for your spouse and for children. In case of insurance premium for parents, you can claim an additional deduction of 25,000. Yes, for you, for your spouse and your children, you can claim 25,000. And if you are taking health insurance for your parents, again you can claim again extra 25,000. So 25 plus 25 up to 50,000 for your parents, for you, for your spouse and children. Next, what it says, section D, if your parents are senior citizens, that means if the age of your parents is more than 60 years, okay, you can claim up to rupees 50,000. If your parents' age is more than 60 years, you can claim up to rupees 50,000 as health insurance every year. Okay, so then for your parents 50,000 and for you 25,000, you can claim 75,000 now. Okay, if the age is less than 60, your parents' age, 25 for them and 25 for your family, so 50. If their age is more than 60 years, you can claim for 50 years. So 50,000. Okay, so 50,000 plus 25,000 is how much? 75,000. Up to 75 you can claim as health insurance under section 80D. What it further says, you can get an additional deduction of rupees 25,000 if you are also a senior citizen. Thus, you can claim the maximum deduction of rupees 1 lakh under this section. Yes, here, if your parents are also senior citizens and you are also senior citizen, your parents' age is also more than 60 years and your age is also more than 60 years, at that point of time, you can claim the deduction up to rupees 1 lakh under this section. Okay, so if your age is less than 50, you can claim 25. If your age is more than 60, you can claim 50. If your parents' age is more than 60, you can claim 50. If their age is less than 60 years, you can claim 50. So from the minimum deduction of 25,000 to the maximum deduction of 1 lakh rupees, you can claim under this particular section, that is section 80D, with respect to the deduction for health insurance premium paid by individuals and by HUF. So this is what it explains. Next, section 80DD and section 80DDB. Okay, we have two sections here. So if you spend money to take care of disabled dependents relatives, you can claim the maximum tax deduction under section 80DD. So under section 80DD, you can claim the deduction for taking care of disabled relative. Okay, it's not only your children or spouse or your parents, and you're also taking care of some other relative. Okay, your cousin or your uncle or somebody, whoever it is, if they are your relative and you are taking care of them, if they are disabled, if you are taking care of them, then you can claim the deduction under section 80DD. It allows individuals and HUFs to reduce their tax liability at a fixed rate depending on the nature of their disabilities. Yes, based on the nature of the disability, they are going to give the deduction. You can claim a fixed deduction of rupees 75,000 in case your relative has a disability over 40% but less than 80%. That means if the disability percentage is between 40 to 80%, you can claim the fixed deduction of rupees 75,000. For those with more than 80% disability, you can claim a fixed deduction of rupees 1,25,000. That means if the disability level is between 40 to 80%, you can claim the fixed deduction of 75,000. If the disability level is more than 80%, you can claim the fixed deduction of rupees 1,25,000 under section 80DD. Section 80DDB allows the reduction of tax liability for expenses related to the treatment of specific diseases. Yes, section 80DD is with respect to taking care of the disabled relative, but section 80DDB, it talks about the amount spent on specific diseases. So the amount spent on treatment for specific diseases for individuals and HUF below 60 years old, you can claim a maximum deduction of rupees 40,000 for medical expenses, and for senior citizen you can claim the maximum of rupees 1 lakh. So that means you can claim up to rupees 40,000, and if they are super senior citizens, you can claim up to rupees 1 lakh rupees for treatment of specific diseases. Okay, that is about section 80DDB. Next thing, section 80E. So section 80E, it talks about you can claim the tax deductions on interest paid towards your education loan under the subsection of 80 of the Income Tax Act. Yes, Section 80 talks about the interest paid towards your education loan. If you have taken education loan of 1 lakh or 2 lakh or 10 lakh, whatever the interest you are paying every year on the loan amount, that interest can be considered as deduction from your total income earned for that particular year. So this deduction ATC, there is no maximum limit for claiming deduction, but you can claim it for up to 8 years from the beginning of the interest repayment or till the full payment of interest, whichever comes first. You can claim up to 1 lakh or 1,50,000 rupees. There is no limit for whatever the interest you are paying on your education loan, but that will be considered for the first 8 years from the beginning of the payment of interest or till the repayment of the amount or till the repayment of the interest, whichever comes first. So whichever comes first, whether the first 8 years from the date of payment of interest, whichever comes first, whether the 8 years which is like payment started of payment towards the loan amount or the full payment of interest on the loan amount you have taken. So this education loan can be taken for self, spouse, children, or if you are someone's legal guardian. That means education loan, it is not only for your education. If it is taken for your spouse education or for children education, you can claim the interest on education loan as a deduction under Section 80E, but there is no limit for the amount. So with this particular thing, I'm going to wind up this session. I'll come up with few more new topics in the upcoming session. Until then, thank you all. Have a nice day. Namaste.